Hey, it's Paulo Brantz, Clear to Close Brokers. As we end 2025, I want to share at least 10 tax saving tips, things that you should bring up to your CPA to help you save on your taxes. Now, keep in mind before we begin, this is not tax advice. Some things will be good for you, some things won't be good for you. Every tax situation is different. So I'm going to do the best I can not to share what we do, because what we do may not work for you and vice versa. That's where your CPA comes in. These are things that you should just be bringing up to your CPA in order to achieve saving money. I love to save money. Do you love to save money? Good. Then you're going to want to pay attention to this. Let's go ahead and start the little slideshow here. So what we got is, let me just get this going here, is the IRS essentially has two tax codes, one for employees, W-2 employees and such, and one for business owners. Now, the idea about being a business owner is, and why people become business owners, is because they want to write off as much as possible to, and legitimately, right, to save on taxes. Now, keep in mind a couple things. You know, when you're self-employed, there's things like mileage and auto expenses and leases and all that great stuff you get to write off that someone that's a W-2 is not going to be able to do so. So the first major tip that we're going to bring up here is tax planning versus tax filing. Look, let's be real. Most of you only talk to your CPA one time a year, and that's when they tell you how much you owe. The truth is, you should be meeting with your CPA multiple times a year to have a tax planning. If you're not having conversations such as, hey, if you do this, then this is how much you'll pay. However, if you structure it this way, this is how much you'll pay. You either want to ask better questions or you want to get a new CPA. They're there to save you money, not just push paper and tell you how much you owe. So there's number one. Number two is, if you don't have clean books and if you're not keeping all receipts, you're missing out on deductions. Every dollar you spend for business or a business expense, about 30 cents of that is going to the government. Excuse me, let me rephrase that. Every dollar you earn, 30 cents of that is going to the government on average, probably more, but let's just say on average. So if you have $5,000 or so that is you're not claiming, or you lost the receipts, or just because of bad books you forgot and all that great stuff, you don't have a system, how much money are you actually giving to the government that is not theirs and it should be yours? So there you go. Number one is going to be meet with your CPA more than once a year. Number two, make sure you have clean books. Now, as self-employed, you get to choose between like Schedule C, an S-Corp, C-Corp. You know, I don't know which one's right for you, but there is a right one for you. And if you're making a decision without consulting a CPA, you're going to be most likely in the wrong one. I've seen many people that are in corporations that honestly don't even belong in a corporation. They're paying excess filing fees to have an extra tax return filed. It just doesn't make sense to them, for them. However, I've seen Schedule C people that should have a corporation. So yet another conversation that can really save you some money in tax savings and tax strategies by figuring out what type of entity you really should be. Business vehicles and Section 179 deductions, I will tell you, that if you buy a car, the year of it, the portion of it will be deducted, assuming it qualifies for a Section 179 and it's used for business uses as well as leases. We use this strategy a lot with our cars. And again, that's not tax advice. You want to speak to your CPA. But as a business owner, you're given certain things that a W-2 employee is not. That portion that you're using it for business can be a tax write-off, and it should be a tax write-off. So you have business vehicles, lease, and Section 179 items. Maybe, by the way, it's time to go buy a new car before the end of the year. Just throwing it out there. Retirement contributions as a tax strategy. You get to put money into an IRA, a 401k, or whatever you have with your financial planner. By the way, if you don't have a financial planner, we need to talk. Our job here at Clear to Close Brokers is not only to help you save money, but but it's to get you to your retirement with paying less taxes and with an actual retirement. So if you don't have one, let me know. I'll introduce you to a great financial planner. But as it relates to taxes, this is a great way to reduce your tax burden and put money into a SEP IRA or an IRA account to help you save on your monthly obligations or yearly obligations to Uncle Sam. A couple other ones, it's probably hard for you to read, but there's the Augusta Rule. As a business owner, you can actually rent your house to your business for up to 14 days. It's got to be a legitimate business reason. Maybe you guys host a company party there, a company weekend retreat, whatever it is. Consult with your CPA, see how you can leverage that rule to really impact your bottom line and save you money. Hiring your kids. We use this strategy tremendously when our kids were younger. They would do stuff like clean our office. They would stuff envelopes. All these little things that we didn't want to do, we would hire our kids to do. We would pay them. And by the way, we set up 401ks for them as well. And we were able to put money into 401ks for them and not get taxed on that because that strategy worked for us. Business travel rules. You know, in some instances, you can write off travel if you have a legitimate business reason for being there. The question I'd ask your CPA is, how do I make any travel a legitimate business expense so I can write off my travel? You'd be surprised what the rules are and how you can leverage that to be able to write off part of your traveling expenses. Some advanced moves for some serious savings. These are things like cost segregation. If you own an investment property, you really want to figure out how long you've owned it for. Maybe you've owned it for such a period where you've written off all the depreciation. Maybe now's the time to really figure out if a 1031 exchange for you would benefit you from a tax perspective. Excuse me. There's just so many different ways that you can leverage investment properties. Talk to your CPA. Here's my favorite one. We actually brought this up to a client this week. This is my favorite story as it relates to tax consequences. We do what's called a hopes and dreams conversation. By the way, there's a QR code there if you want to talk on how the best strategy is for you and your family to buy a house in 2026. During this hopes and dreams conversation, by the way, there's no applications, no credit pulls, no obligation, nothing, just me and you talking great, giving you great advice on how to save money on your mortgage. So we were talking, they were saying in 2026, it's going to be the biggest year. We're going to get married. We're going to buy a house. We're going to do all these wonderful things. My fiance, and I said, okay, so what's going on today? Well, I'm working. My fiance is not working. My income is this. My fiance income doesn't have any income. And I pointed out to them that her income was in a huge tax bracket that if they were to get legally married today, perhaps they should consult their CPA if they would be able to file as married, filing jointly, and be able to go into a lower tax bracket. That in theory would save them enough money on their taxes to get this ready, pay for half their wedding just by a visit to the county. Just think about that. That's a pretty cool savings. Anyways, they have to consult their CPA. So here's the deal. This conversation is not about loopholes. I'm not trying to tell you to do something that's not true. This is about understanding the rules of the game and playing it at a high level. Those that understand win. Those that complain do not. You like that? I just kind of made that up. You also want to use it with professional guidance as a CPA. And if you're self-employed and not planning your taxes, the chances are you're probably definitely overpaying. So here's the deal. I really hope this 9 minutes was worth your time. I gave you a lot to ask your CPA, but there's so much more out there. Get the conversation going. Start researching on your own. Don't leave it up to your CPA. And what they're there for is to bounce ideas. Now, if you need a recommendation for a CPA, I'd be happy to give you my CPA's information. He is fantastic. If you are working with a great CPA, I would love to meet them because, believe it or not, I can't refer everybody to my CPA because they're not a great fit. We need CPAs that we can refer. Please brag about your CPA. Let me know who they are. Would love to meet them. And with that, that is your 10 plus or minus tax questions to ask your CPA this year, but more importantly, it's probably too late this year, next year to save huge on your 2026 income taxes. Paul O'Brien's Clear to Close Broker.